Good turnaround Monday, everybody. Shortened holiday week. I don't know why we have Thanksgiving only one day a year. Stuart, Shahab, Brock, how are you? Everyone doing okay? So maybe Tuesday is pushed up a day. Just a couple of things that I'm looking at. I'm doing okay, feel a little tired. So anyway, on the dollar here, the two scenarios I see is that, you know, we start topping here and we get one of these from in here, okay, something like that, or we're going to continue to the upside and possibly, go to the 61.8 again, or maybe even back test the wedge line up here at 78.6. So we'll see what happens. Right now, the way it looks pretty stiff. Yen is up today. I'm giving it a shot on the short side in here, starting to look like a descending triangle setting up here. Let's call this the bottom of the triangle. There are so many with different lower levels, and perhaps something like this. Get this out of the way. You know, something like this. Looks like it's already broken out of this triangle. If I'll leave it there, because then we'll have a false breakout to monitor back under 70, and taking a shot at the Swiss up here as well. Here's one, here's two, here's three. Perhaps this recent move has cleaned out all the bears. People were starting to gravitate towards the Swiss in here. Went from, I don't know, DSI was 10 to 30 or 40. So we'll see about this as well. Potentially if the dollar count, the first one I talked about, that we have one more decline here, we should get a decent break. Something's wrong, and it's vulnerable back under 50 right here. 99.47 seems to be a pretty important pivot. Oil, I thought that I still think that there could be one more shot to the upside. We pointed out the 61.8 last week when it was smoking, and I think Sean, who tweeted me, he shorted up here. So, I'd be taking partial profits just in case, Sean. There's one more shot up to the upside with the market. So we didn't get our 2-week reversal in the market. I needed 30.89 in the S&Ps. And actually, kind of look at this when I go to the NAS too. See how close we are to new highs here? I think we'll get them. Maybe we'll go to 31.40. Um, you know, I flattened out Friday. There were a couple of decent shots here in the S&Ps from, the high last week and then the rebound to 1920 up here. Then the rest has been chop. I don't know. It doesn't look impulsive, but still could be a failing rally. I don't know. It's worn me out, even though they were decent trades. I'm kind I'm kind of tired of trying to top pick it. So get ready for them to pull the plug on it. But I just want you to look at this and then look at this. It's so much weaker, and even the Dow is so much weaker than this. And I think part of it could be that the oil shares kicked in with the oil rally, and there's a lot in the S&Ps. I'm not sure about the Dow, but there's none in the Nasdaq. Mainly tech. I don't think there's a lot of oil companies that are in the Nasdaq 100. So we are getting some tells. We've been talking about it that this is probably your preferred short when the market turns, and this could be it. It could just roll over. And if that happens, well, I'll have some short yen on, and If that happens, yield should continue to drop. So here's TLT, so combination of the 20 and 30-year rates. Think that break should be supported here at 137. Maybe you get kind of maybe a right shoulder developing down here around 138. And then we go back over 141, gives you 148, the old highs. Um, this to me still looks like a continuation formation, doesn't look like a topping formation. And, I thought when we were down here, my target was 132, which is okay because this is when I was talking about the yields having one more shot to the upside when the 10-year was here. So I guess the question that remains is, are we going straight down to new lows, or can we have one more jiggle up towards 210 or so? So tread lightly during this week. Don't get too aggressive. You'll notice the markets can be exaggerated. I think a lot of people are taking the week off for Thanksgiving. At least, some of the people I talk to, and maybe they'll be around today. Wednesday is the day before, and then Friday, I believe, is a shortened session. So it's not the kind of week to really get aggressive. Just probe and protect, and look forward to December, at least for the first 2-3 weeks before everyone's again comatose in holiday mode. So that's my take on what's happening today. Any questions? Monica, good morning to you. Okay. All right, everyone's good? You're welcome. I think I'll leave the medals for Steve. Okay. Steve's got a handle on it. Yeah, I will say one thing, Shahab, when it comes to gold, if this is the end of the yen rally up here, if we peak up here and start to head down, that's going to be bullish gold. And I also heard that or read that the gold silver ratio, not the gold silver ratio, the miners, the bullion to the miners are flashing buy. Okay. Uh, Even with gold starting to correct, that's usually a pretty bullish sign too. Okay, buddy. Good hunting, everyone, today. All right. Have a good guess. Arnaud's going to be with us with Intel Invest. Take a look at what he's seeing wave wise at the top of the hour, and turn it over to my teammates. How you doing, Blake?
What's up, Coach?
Hey, buddy.
So, it looks like the comments here that I'm reading this morning are that the U.S. and China have received they've come to some sort of consensus on a deal. Looks like that if a deal gets done, there's going to have to be tariffs that are rolled back. So, there hasn't been a formal announcement, but I was reading, this tweet from the Global Times. Xinhua news agency is also saying that it looks like there's consensus on a deal, on a phase one deal, and it's interesting. The S&Ps are coming off a little bit. I you know there hasn't been any like formal announcement yet, but what we're seeing here is we're seeing some yen strengthening. We're seeing a little bit of stock market weakness. What's more interesting than that is we're seeing the Aussie weaken. Look at the Aussie.
Wow.
Yeah, I mean, I made a point of this during the week ahead webinar. If a deal was
What
coming to
time are we
wait,
doing these?
hold on.
Okay, sorry.
Something's moving right now.
Oh,
Hold on. Uh, dollar yen spiking a little bit here. So Tweet from the Global Times. That basically a deal is I think that is a tweet from the Global Times. Hold on, I'm looking for it. But that, that's that I already tweeted that out. That was 30 minutes ago. And these guys, some guys from the Squawk services are like talking about it now, but and the algos apparently got a little bit of little jitters on that. But overall, again, I'm gonna point out, why is the Aussie so weak? I mean, if things were so good for China and the U.S., the Aussie would be a beneficiary here, and that's the point that I made on the week ahead video. It's like, why is the Aussie? Why? Well, yeah, why is it so weak? Not saying that you can't be a buyer of the Aussie dollar, but why? That's like the head scratcher for me. It's like I sit here and look at it and go, well, I should be buying the Aussie. I should be buying, like, let's say, the Aussie yen, but at the same time, it's like, man, it's still trading really heavy here, and we're really close to this, like, pretty big trend line here. We've been on it pretty much since last week,
especially if the yen caves.
Yeah, but it's not, the yen's not.
Yeah.
I mean, your point is if the yen strengthens, the dollar yen weakens, right? But it really hasn't. So, I mean,
and it's still not acting good. It's mainly the Aussie weakness that's taking it down.
Yeah, hold on.
Right.
Hold on. I'm going to read something here.
Oh yeah, yen's popping a little now.
Yeah. Stand by.
Good.
Gao further noted that the two sides have even agreed to roll back tariffs as part of the phase one deal, but there were different opinions over which tariffs should be removed or what degree the tariff should be lowered. So some people are thinking that China wants more than September plus rolled back, and the U.S. saying we need more than. That's the holdup, apparently. So it's obviously right now about the tariffs. So here it is. This is from First Squawk. Okay, I just tweeted that.
Which, China, by the way, Blake, means capitulation from the side of the US, right? Because we know that the US has a huge trade deficit against China, which means that any US tariffs affect more than any Chinese tariffs. You know what I mean? China and US have reached the wrong.
Yeah, I guess. But I mean, China wants more rolled back. The U.S. says, "Man, I don't know if we want to," and that's really now it's more of just, I guess, figuring out what tariffs are going to get rolled back.
Steve's rooting for China.
No, why would they do that?
No,
I know you are.
But I'm just rooting for some deal to get done.
Yeah. Oh, for that I'm rooting as well.
Yeah, I don't care what it is. Just something, get it done, for crying out loud, so we can move past it and actually see some people put some bets in the market. That's all I really care about at this point. So let's take a look at, I'm going to just kind of take a look at the yen, and the yen, as you can see here, you got a little fib action here. So we have the 618 comes up around 109. That looks doable. I mean, we're getting close. And so we broke this little minor trend line here. I think that we could get back to 106. Or 109. Excuse me. I do think we can get back to 106 as well, ironically. But and I have to say that I think a lot of this is just baked in the market. So that's why I'm more interested in seeing the reaction once a deal is announced more than anything. So anyway, we can come back to that. I just was, perking up a little bit on the dollar yen. So had to turn our attention to that. Euro's trading, kind of heavy. Actually, we just broke this this minor trend line here. I do think that support's going to be around this 110, 109, 90. This is all going to be pretty key support. Cable's holding up pretty well this morning. I'll let Stelios talk about Brexit, and he's going to pull out the gun or maybe the noose shortly, I'm sure. But like I said, the Aussie, why is the Aussie trading so heavy? Why? Can't figure that one out. And the Aussie's just so heavy. If the Aussie breaks through this 67.70, this confluence of support here, I mean, we're going a lot lower. I would think we're going back towards these trend lows. And why? Again, it's like my gut instinct says don't buy it, but my mind says I should be buying it, and so therefore I'm not doing anything with it. But it's it's just interesting to watch the Aussie so weak at this moment. Kiwi, same thing. We're just knocking our head up against resistance, and you can see the New Zealand yen. This is a big one that just keeps knocking its head up against 70. We have a bullish wedge. Nitish in our chat room, he said, I used to know this guy that would say this is a bullish wedge. It is a bullish wedge. It's also channel resistance too. I mean, if you think about this, it's range resistance or channel resistance, whatever you want to call it. But the fact of the matter is a breakout above 70 or 70 and a half at least is going to take out some stops. You'll see all the stops get worked over the top here. Actually, what I wouldn't be surprised with, you see the 618, I wouldn't be surprised if we went like this, boop, 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 like that. You announce a phase one trade deal. We take out all the upside stops here and then reverse. That wouldn't surprise me a whole lot. But yeah, I'm sitting here I'm more curious on why the Aussie is trading so heavy, and versus the dollar. Why isn't the Aussie stronger? Steve, since you're here this morning, and I heard you pipe in, what are your thoughts here with the Aussie? I mean, I don't get it. I don't get it, especially with stocks as strong as they are. We know we're close to a phase one trade deal. Maybe we get it. Why isn't the Aussie acting better?
Somebody would expect that it would, but indeed it doesn't. I mean, we still remain trapped in a descending channel having to do with the Aussie against the USD. And especially one of the pairs I wanted to show is that if you open the Aussie yen, somebody can make the argument that this recovery in the Aussie yen, if you go on a daily chart, this recovery seems like a big pennant, right, or an ascending wedge. I mean, connect the two highs there.
Yeah.
You see, so I mean, Aussie against the yen looks very, very, very fragile as well. So, as you said, I mean, intuitively, somebody would expect a move higher, but the charts are telling us a different story, right?
Yeah, they totally are, and that's boggling to me. It's very surprising that we're not seeing the response you would expect, and that makes me a little nervous. Like, what does the FX market know that no one else knows? And that's why I'm very, very hesitant about being super optimistic on what's transpiring right now. It's like my
experience, which is less than yours, is that usually when the charts show in one direction and fundamentals should be pointing elsewhere, I usually prefer to go with the chart because we know that the market can be completely decoupled with any fundamental forces for as long as it wants in us.
Yeah, one of the other things, I guess, we may look back, let's just say like a month from now, phase one deal gets done, whatever happens. We might look back a month from now and go, the Aussie was really telling us the whole time, illustrating what was, the issue here. I don't know. And obviously only time will tell. And, but but this is one thing that makes me a little hesitant, whether it's the Aussie yen or, the Aussie dollars. It makes me very hesitant about getting too entirely optimistic about all this. Now, the flip side to that is if you look at the S&P, obviously stocks are very optimistic about everything. We're near the highs here in the S&P, and we're not backing away. So that continued strength in equities, has to at least capture your attention and lead us to believe that there's some bright spots that are going to appear once a deal gets done. But I've often believed and throughout my career that the equity markets are usually the last to know. So it's I watch them. I don't I'm not getting bearish. Obviously, I'm very aware that we're at the 161% extension of this last move lower. But that doesn't mean that the stock market can't go higher from here. It still looks strong. And I'll just repeat what I said during the week ahead video is as long as we're above this, 3070, 3060 level, there's really no reason to be bearish, because stocks continue to look bullish. And even overnight, we just, we're just continuing to maintain overall strength in the markets. But yeah, I don't know. It's interesting. It's a very slow market. We are, and let me reiterate really quick. We are in Thanksgiving week. Steve, Stelios, are you guys here?
Absolutely.
No.
Okay. So hey, Stelios is not here, and he wants to talk about Brexit really bad. So we're going to let him do that in a moment. But I wanted to say what I said during the week ahead video with everybody here and you guys here. We typically do not broadcast on Friday after Thanksgiving because it's a long weekend here in the United States. The stock market, I think, is open half day on Friday, if I'm not mistaken. And I believe bond markets might be closed. I have to go double check all that. I'm not even thinking about it at the moment, obviously. But one of the things that we've done in years past is if there is some volatility, if there is some movement, we might do an impromptu webinar for you guys, and I always leave it up to Stelios and Steve, depending on because they're the ones that are usually awake and around. So Steve and Stelios, you want to comment on that at all?
You're talking about the
Friday
webinar.
Friday.
Is it this Friday?
It's this Friday. Yeah. Thursday we won't broadcast because that's going to be Thanksgiving, the holiday. But it's the day in between. Thanksgiving always lands on that Thursday. Then we have the Wednesday or the Friday, excuse me.
We can do, sorry to interrupt, we can do what we always do. If there is market activity, then we can definitely go through with Steve, for say half an hour.
Some basics.
Yeah, basic stuff.
Yeah, so like I said, it's more of an impromptu thing. I think you guys have done it in the past. Is if the market's moving, if there's reason to be broadcasting, we'll send out some tweets and start up a broadcast, which there could be, and that's the whole reason why I'm bringing this up is because it is the Thanksgiving holiday, yes, but we're all also in the midst of trying to secure some sort of trade deal. How about if it happens over the Thanksgiving holiday? You know what I mean?
Absolutely.
So anyway, just some I just want to let everybody know that there might be an impromptu webinar on Friday, but most of us will be celebrating with our families. So with that being said, we are getting into the holiday season. Very little liquidity right now, very, very light liquidity. I was just reading Citibank that's looking for some dollar weakness going into predominantly against the euro and the cable going into month end. Some of the month end flows look like some dollar weakness. Other than that, we're very range bound in the FX market. The euro's bouncing between this 110 1970 and I would say 112, 111 and 112, but we're probably nearing the lower end of the range in the euro. So if you're short the euro dollar or you're bearish the euro, just be careful being a little bearish down here, I would think. The pound is still stuck between the 128 130 levels. I am getting a little nervous with the cable because we have this this pennant, and it's starting to stretch out a little bit. As far as the flag is very mature. So if we are going to see a breakout, it has to happen like pronto, like this week maybe. But if we don't, the risk is that we could potentially start breaking down soon if we can't take out the 130 level. And like I said, I think we need to keep an eye on this Aussie. This Aussie's really weak. It's Aussie's hitting lows on the day right now, and we're approaching this really key support. So I don't know what to make of that. And I think it's something that we need to pay pretty close attention to, because the Aussie should be the outperformer, but it's not, and that's that would be a little concerning, overall. But guys, do you have before I turn it over to you, any comments? I have to mention this. We have a Cyber Monday deal that we're going to be releasing, right?
Yes, correct. Cyber Monday.
Cyber Monday, which this is kind of we got a couple of requests from people, and we're like, you know what, we should probably put something together. So for those of you that are waiting for some sort of Cyber Monday deal, we're going to be talking about the details later today, and that'll be for Monday, I believe, Monday the December 2nd, right?
The upcoming Monday, yes.
Yeah,
exactly.
So December 2nd, and it will only be that day. So for those of you that are looking for a deal, a Cyber Monday deal, you'll have it from us.
Indeed.
So that's good. Yeah. And it'll just be a wham bam, thank you ma'am, quick, in and out. Kind of like you better jump, you got to jump on it while you can, kind of thing, because we did that. I think we did that last year. Somebody and we had a couple people that had requested, are we going to do that again? And so we're gonna put that together. Anyway, well, I thought I'd turn it over to you guys. I wish there was something more exciting to talk about, but I do think the closer we get to this deal being done, obviously everybody's on eggshells here, and everybody's just tiptoeing around the markets. Be on the lookout for some broad-based announcement, and then you have to be ready to respond. That's the most important thing, is you have to be ready for some sort of response in the market. So
let's not forget to mention our sponsors.
Who?
Our sponsors.
Who? Just kidding. Forest Park FX. Yes, guys, if you guys are looking for a broker, or you're not, let's say you're not, first of all, you're not part of the Forex Analytics community, and you want to be part of the Forex Analytics community, Forest Park FX right here, they can try to get you in the reimbursement program, where you can end up paying for Forex Analytics based on your, the trade volume that you do. So you can be involved in our community for free and join our chat rooms and all that stuff. And if you're in the United States and you don't qualify for the reimbursement program because you are in the United States, that's fine. Contact them anyway, because they'll at least find you a broker that you might be able to get some cashback rebates. But Forest Park FX is our partner, and they are a webinar sponsor. So make sure you visit them. They're a really wonderful company. Yeah, just do it. Okay. So guys, I'm going to pass it over to you.
Thank you, Blake. As an American, I want to particularly thank you for the lovely holiday of Thanksgiving. I was lucky enough to be for 12 years in the Athens College, which, as you see, is an Hellenic American Education Foundation. So we were the only school that were actually celebrating Thanksgiving. So 2 extra days off per year. So
that's great. I'm sure you enjoyed it.
Indeed.
All right. Have a great one, guys.
Thank you.
Okay. Bye.
Okay. So do we have any data? I don't think so, right? Let's have a look. Some Canadian minor.
Nothing.
2 things I want to mention, obviously, about the 2 main items. First of all, the US-China trade deal. More headlines that it's done or close to being done, phase 1. But then there's another headline that says there are some differences remain still over the quantity of tariffs and how, timing. So really, they've agreed, but they haven't agreed. Surprise, surprise. We have to wait a little bit longer.
Yeah, this thing is going to go on honestly forever. I mean, it was obvious that there is no chance they can have an actual deal. So what are we going to do about it? Break it to phase 1, phase 2, phase 3. My personal assumption, and I strongly believe in that. I think we're going to see phase 1, which is going to be something completely watered down. It's going to benefit more China. And we're going to get to the elections just by promises that we're getting closer to a phase 2 deal, and phase 2 deal is going to be like, the real deal for us, and it's where we're actually going to, get the biggest gain. And then we're going to get closer to the election, and Trump is going to be like, something, you need to re-elect me so I can actually have the leverage to push forward for, the proper phase 2 deal. And that's how I think we're going to move all the way to the election period.
Yep, absolutely. And remember, we have Michael Bloomberg who's running, and he's going to be, I think he's going to be a major threat to Trump. And, it's something that the Chinese might be looking at as well, right? They have a chance. If things look like Trump might have problems with the upcoming elections, they might try to force things and try to get something, better for them earlier, right? So, it's something to look at.
I don't know. Have you seen any early polls? Because from what I've seen so far, at least it's extremely early, of course. But Bloomberg is not like he's like fourth.
Yeah, he is. Yes, but he only announced.
He only just
right?
begun. Yeah, that's true.
Yeah,
that's
and we know what he's like, and his popularity. I think he's going to be going up as we go into next year. So let's see what happens with that. What else? Oh yeah, Blake mentioned the UK. So it's probably worth mentioning very quickly about what's happening there. Nothing happened overnight, but we are getting close to the elections, and let's remind ourselves. First of all,
we did have a gap higher, though. Any explanation for that, Stelio?
I don't know, actually.
Because it didn't happen to the rest of the USD pairs. It was exclusively, at least from the majors, it was exclusively for the cable. And indeed, I had seen no news, but we still did have that gap higher. And
yeah, you're right. And sterling has jumped against the euro and dollar.
Yes.
Good question. Maybe somebody can help us. I didn't see anything. But the thing to remind ourselves, first of all, the polls, there are more polls every day, and they're showing Conservatives still in the lead. And if anything, it looks like the lead is widening. And so let's remind ourselves, we have the Conservatives and the Brexit Party who are pro-Brexit, and we have Labour and the Lib Dems who are pro-Remain. And before the elections were announced, if you remember, Boris Johnson brought in a deal with the Europeans to Parliament. The Europeans obviously accepted it. The MPs accepted it as well, but they didn't accept on the timing because they were given like a day or two to go through it. And so theoretically, if Boris Johnson gets voted in,
we should get that deal passing through. Yeah, theoretically speaking, yes.
Effectively, the people are endorsing that. So
yes, indeed.
So
it's like a referendum in essence, because if you're really, let's say, against Brexit, even if you're a Tory, you can, for that election, choose to, vote the other way just because of that. So, indirectly, it is another referendum on.
By the way, thank you,
Brexit.
Petr says it was an election model predicting a large majority for Conservatives.
That makes sense.
That makes sense. Thank you for that. Yes. Yeah, I mean, obviously, we know what models and predictions are like. They haven't had a very good history recently, but still, it's something that you have to watch.
To be honest, my gut feeling tells me the same thing. I mean, looking at Corbyn, etc., I really don't think he can pose any, real threat.
Yes, I agree with that. So that's it. Data-wise, we had very little. We had German IFO in line, and Mexican GDP slightly lower than expected, but really nothing's going to move anything at the moment.
Yeah, but should be a very quiet week. Let's see what we get.
Yes.
Should be.
Yes, sir.
Okay, Stelio.
Thank you, Steve.
Thanks. By the way, we got that wholesale trade month on month, the Canadian one. It was a bit, a 1% versus 0.3. Not, of course, that it moved anything. Just mentioning
Yeah,
since we talked about it, just mentioning the outcome.
you.
And we don't really have any other data until much later. We have retail sales for New Zealand. So later tonight, at least almost midnight our time, Stelio, we have some New Zealand data. Until then, nothing to mention about. So the market shouldn't be moving due to this kind of news, at least not today. Okay, great.
Steve.
So let's jump on the charts. We already have, from what I see, some requests. With Bloomberg joining the race, Trump needs a win faster. But yep, I would agree. What about gold? Yes, we're going to have a look at both of the metals, and we're going to have a look at them on the 4-hour chart as well, because we have had developments there. Hope we expect some highest bullish in euro yen. You go through. We can have a look at the euro yen if you want. China smells more blood with Bloomberg in the race. I would have to agree with that. And as I said, the Chinese are not, the ones being under pressure at the moment for two different reasons. First of all, we know that time is working for them, getting closer to the elections, because Trump needs to deliver, they don't. And two, which is connected to one, it's because they don't have a democracy. So in essence, they don't have to worry about, what the majority is going to think about re-electing Xi or whatever else. I mean, he can remain patient even temporarily against the short-term benefit of the economy, because the Chinese have the benefit of having a longer-term plan, because they're not bound by what I have mentioned multiple times, that it is a huge vulnerability in Western democracies, which is the political cycle. Due to the political cycle, unfortunately, you get politicians that move away from many long-term plans that might be very, very good for the country, if they cannot produce results soon enough for them to get reelected, and they choose in exchange shorter term benefits that in the longer term might even be harmful to the economy, just to increase the chances of re-election. So China has a big advantage on that front, having to do with diplomacy, right? And needless to say, we've seen who is the weak party in this negotiation, and completely unbiased, just by looking at what the two sides are saying. We have the American side, which constantly keeps claiming that we're very close to a deal, and we have the Chinese that usually claim that we're further away from the deal. So, in any type of negotiation, the person or the side that claims that we're further away from a deal is the side that's going to get the most concessions, right? So just by, noticing the statements from both sides, you can understand which of the two sides will have to move more towards the other direction if there is some type of phase one deal to be achieved, which, as I said, I do believe that we're going to get a phase one deal. It's going to be extremely watered down, but just to save face. And I do believe that the Chinese are going to be smart enough to get quite a few concessions for delivering almost nothing. Okay, hard to get concessions after passing the Hong Kong bill. Yeah, that will also play some part. I agree with you. Hi, Steve, your thoughts on CAD and yen pairs, please. Pound CAD and CAD yen especially. Yes, we're going to have a look at those as well. It was election model predicting large majority. Yeah, thank you, better than that explains it. Okay, let's start by that. First of all, I still believe, and I'm going to be very brief about it, that this is a bullish consolidation. So I would still expect the pound to break higher. And having to do with the pound yen, you can see that the same thing applies here potentially with the pound yen. I mean, we have to a little bit reshape this triangle, but as you see, this still looks like, forgot to put the second arrow, this still looks like very much, okay, nice. Siri thought I'm talking to her for some reason. This still looks like it can go either way, but given the nice momentum we had prior to this consolidation, it looks like a likely outcome that we're going to have another push higher towards 143. Look at the RSI as well, right? RSI has been orderly moving lower, testing trend line resistance once again. I think there are very decent chances for the pound yen to also break to the upside. Now, since you asked about the yen percent, I haven't forgotten the previous questions. We're going to go through all of them. USD yen is still untradeable, but it is still potentially forming an inverted head and shoulders formation, right? I mean, symmetry is still decent between the two shoulders. It's not perfect, but it rarely is perfect. And one thing is for sure, we've been trapped since like 11th of October, 12th of October. So we've been trapped already 1.5 months in this very tight range between 108 and 109.50. So, this can't go on forever. So basically, we break 109.50, we trigger this inverted head and shoulders formation, we should be accelerating higher. We break through 108, there is no real support then until 106.50. Okay, so one way or another, these are the two levels you should be paying attention to, and whichever of the two breaks, it's going to produce, a continuation to that direction, whichever of the two directions we're talking about. So having said that, one of the questions had to do with euro yen as well. Now, what I can tell you about euro yen is that it remains in a so far corrective rebound. We've spent quite a lot of time consolidating here, just riding the 50 daily moving average and this horizontal support area like 109.50, 109.70. It's not unlikely that we're going to see more upside, right? But if we do see a breakdown from this trend line, then you don't want to be long. So it makes sense to have in the short term a bullish bias as long as this channel is holding. But if this channel breaks to the downside, then I think you should be looking for lower lows, because that would indicate that this was a corrective move that had already been completed up here, but it's too early for us to judge if that was the case or not. I know that it's not easy in many questions and many pairs. We have a lot of ifs depended on specific levels or specific areas, but keep in mind that this is a very common characteristic in markets that have spent a lot of time consolidating. Now, the negative thing about it is that it's very hard to have a directional bias when the market is treading water in essence. But the good thing about it is after you get a prolonged period that volatility has been contracting and you eventually break through, a tight range or a very well-formed technical formation, there's a good chance that then you're going to see the exact opposite, which is, all this pent-up energy, dynamic energy that has built in the market, suddenly, exploding higher and, producing very fast moves. So I do think that, sooner rather than later, perhaps not this week, because it's a week, with very little news. And as Blake mentioned, we have, the holidays as well. But I don't think it can take much longer than that. Now, one of the pairs I wanted to show we already did through Blake, and that was Aussie Yen. You can see here the formation I had in mind. So testing support here, that's going to be pretty important for Aussie Yen to hold, because breaking lower from here, in essence, is going to show that, you know, this formation, corrective formation, likely is over and we're headed lower. Don't forget that we've been in a downtrend since September of 2017, right? So there is absolutely no question what the direction of the trend has been so far. Now, he also mentioned Kiwi Yen, just to, once again, just to say, here we have a 100 pip range, and for just 100 pip range, because usually pairs like the Aussie Yen and the Kiwi Yen, you know, tend to be more volatile again, you know, versus what we have against the dollar. It's quite you know, it's quite an achievement that we've managed to spend, like, what is it now, 5 weeks, a little bit more than 5 weeks, remaining trapped within this 100 pip range. So I do think that this is potentially another nice trade, because once we get a breakout from this formation, we should extend at least 100 pips, which is the height of this rectangle. Now, we had questions about the pound CAD as well, and the CAD yen, and the metals. I'm going to go through all of them. Let's begin by the CAD, saying here, first of all, that the USD CAD has also been trapped. You can see it here in this just slightly ascending channel. I mean, it's almost a range. It's very slightly inclined, right? And it's been quite some time that we've been trapped here. There's no question that 133.50 is very, very strong resistance area. So the closer we get to that, the better the risk reward is, you know, to be short for perhaps more consolidation in here. But if and once we break out from 133.50, I do think that USD CAD can extend to the upside, if of course that happens, right? Now, having said that, and, you know, mentioning the Canadian yen, I have to say that the Canadian yen would favor perhaps also a rejection of the USD CAD from there, simply because here in the in the Canadian yen, we had, if we want to take into account, let me draw one more line here. If we want to take into account that week as well, we've had this triangle, right? We broke to the upside, and this formation so far looks corrective to me. I mean, pretty much corrective, right? Now, the only thing that troubles me here is the fact that we tagged this resistance area and the equality target from this first leg higher to the second leg higher perfectly. So we did get rejected perfectly from an area that you would expect, but the price action that followed definitely doesn't have impulsive characteristics. So, you know, my feeling tells me that there is a decent chance that there is more upside left here in the Canadian yen. Now, will that happen because the Canadian is going to strengthen? Will that happen because the yen is going to weaken? Will that happen because just, you know, the Canadian is going to strengthen more than the yen, or whatever combination of all that? You know, nobody can tell you, because, as I said, both of them, both the USD CAD and the USD yen, are trapped in ranges, right? So why make predictions and not let those tight ranges actually show us which is going to be the direction? And once they do, I think it's going to be worth jumping on those trades, because there is going to be a very good chance, with so many stop losses that will have accumulated, to see a very decent follow through. Okay. Pound CAD. Pound CAD, if I remember right, is still toying with resistance. Yeah, actually, there it is. There it is. Haven't seen this chart in some time. Last time we were testing that resistance, and they said we might get rejected again. We did get rejected, but It was just, a few days of downside. And guess what? We're back again, testing the same channel once again, right? So obviously risk reward ratio favors once again from here the downside, especially now that we've reached also another area of resistance. Just look at the big picture here. Found support at quite an important area. But in general, the trend since mid 2016 is non-existent. I mean, we've seen sharp moves to the upside, to the downside, to the upside, to the downside, consolidation. That was an easy move to predict, actually, because that rebound higher had very clear corrective characteristics. Then this sharp move lower, which also produced another false break like this one, right, back then. And now we're back in the middle of that long-term range. So in the short term, risk reward would favor short positions. Looking at the longer term, you're exactly in the middle of all that range. So basically, nada. I wouldn't be doing something with it if I didn't want to scalp it short, which I don't. I'm not a scalper, as those of you that watch the webinar know very well. I covered those questions. That question. Metals, yeah, I'm not going to forget about them. So yeah, I said that I want us to have a look at the metals on the 4-hour chart, because on the daily they haven't really done something big, but they have done on the 4-hour chart. And these were the formations I was looking last week, expecting that we should see new lows, gold and silver, which is currently testing that formation. So despite both having found support, we've seen on the daily, let's go back to the daily so you can see it. We've seen on the daily that both of them found very nice supports on the daily chart. Here is gold and here is silver, right? Looking at it from a shorter time frame, it looks like they want to go lower first. So I think that gold is this. I think that gold is going to do something like this. And I think that it's very, very likely that silver is going to do something like this as well. Okay. So in the short term, although I remain very, very bullish the metals in the long term, I mean, very bullish and very convinced about it, because, the metals will eventually follow fundamentals. And fundamentally, we know very, very well that there has been a huge debasement of fiat currencies, and the metals we will have to keep adapting to maintain their intrinsic value. Okay, so anything tangible of real worth is going to keep appreciating against fiat currencies. So I'm very bullish the metals, but I'm not blind. So in the short term, I have no bullish argument. The long term, I have a very good bullish argument. And, I own physical gold, and there is absolutely no chance that I'm going to let that go. Why politics is so tied to China deal if economy is performing well? Because the economy isn't performing well, because the economy is in a very lousy position, is the answer to the first part of your question. Besides, for example, Apple, Starbucks stocks are recovering and doing well. Tesla track is amazing. Monica, first of all, I have to admit that anything that has to do with design is completely subjective. Now, if this has any value, which should have very little value, I'm the son of 2 architects. So, I mean, I've been raised with, quite some appreciation for design. I have to tell you, I consider the Tesla track an abomination as a design, a real abomination. But as I said, I totally understand that, it's a very, different type of design. So I can understand that can be, there can be like contradicting feelings about it, right? And taste is something very subjective. But personal point of view, I find it as a design an abomination. Now, having to do with the US economy, I've explained multiple times why the US economy is doing very, very bad. Actually, it's doing much, much worse than any developed economy. The US is currently is running a deficit that is above 8%, while theoretically speaking, still in expansion territory. Rule of thumb tells us that automatic stabilizers usually add around 4 to 5% to the deficit once you go in a recession. That would mean that once the US goes in a recession, which is going to be far away, we're going to have a running deficit of something like between 13, 14, perhaps even 15%, which is absolutely and completely unheard of for any serious developed economy. So there are going to be major consequences for that of the dollar eventually. And when I say eventually, I don't mean in 10, 20 years from now. I mean a lot sooner than that. I don't know if Trump is going to be able to, they're going to throw everything they can at it to prolong this business cycle for exactly one more year until the election period, because if they fail to do that, Trump has zero chances of getting reelected. Zero. In 88 years, there hasn't been a single president that has managed to get reelected while the economy is in a recession. Okay, so if they fail to do that, Trump has zero chances of a re-election, in my opinion. Anyhow, there's almost nothing that's zero besides death.
The author of The Fourth Turning disagrees with that. Just want to let you know.
Okay, Coach.
He actually believes that a bear market would be helpful for him. I think he was thinking at the beginning of the term, because people, he's talking about millennials liking strong men on both the left and the right. They want a leader, and they're tired of old politics. So, if things got bad,
if you remember from when you interviewed me several years ago,
I don't.
I started.
I don't remember what I did last week.
I started my trading career trading football bets. When I was in university still, we're talking about many years ago. I mean, we're talking about, I'm now 39, like more than 15 years ago, we're talking about. I'll tell you something. Anybody that believes that Trump can get re-elected with the economy being in a recession, I offer them a 10-1 odds betting against it. So whoever wants to take that, I offer 10-1. Okay. So you want to bet me?
No, bet the author of The Fourth Turning.
Yeah, no, I'm just saying. I have so high conviction on that, because let's be very realistic. Trump promised as a candidate two things: that he's going to change the US, that he's going to stop the disparity, the discrepancy between Wall Street, let's say, and Main Street, that the Obama economy was completely phony and a bubble, and he's going to bring back to the US manufacturing. Manufacturing is already in a recession. He now claims that the exact same statistics that he was claiming to be phony, unemployment, stock market, etc., that they're the only testament to his success as a president. So if he loses that argument, there's nothing left on the table.
Okay. So we'll see.
Yeah. Within a year, we're going to find out.
Yeah. It's going to be an interesting trading year.
Yeah. I can tell you one thing for sure, guys and girls. Gautam is asking, do you think we will be in a recession next year? Let me be clear. If they didn't throw everything they have at it, we would have already been in a recession. They're trying to hold the recession throwing everything at it. And by everything, I mean monetary policy, public spending. Keep in mind that the deficit in the first 3 years.
You have a taker. Monica Ponce wants to take your bet, but she's not solvent. So I'm wondering what she's doing in face.
Is it
okay.
possible to buy gold, silver from a bank? At least in Greece, it is from the central bank. The most common method to buy gold I think in many countries in Europe is buy. I'll show you what.
Why buy it? Just go to Steve's backyard and find the coffee
Great
cans.
Britain, St. George's gold coins. See if I can find it for you. Nope, not those one. Yeah, there it is. This one. This one. This one is the most common. They've been out since, I have some of them that date back 100 years or something, if I remember right. You can see this one. It says 1913, for example. You see, this is one of the oldest type of gold coins.
So there's numismatic value with that?
Oh, yeah, they currently, if you go, for example,
there's a premium.
There is a little premium if you want to buy it from the central bank. There is a premium. So, for example, Τράπεζα της Ελλάδος, χρυσή λίρα. Let me show you. There it is. Let's see the last one. There it is. You can see it. Yeah, there is the premium. You can see.
Yeah. Okay.
So there's a decent premium, but you can, buy them in the secondary market as well. Okay.
Yeah. Don't wait to buy gold. Buy gold and wait.
Indeed. Or otherwise, for example, in Greece, I have a friend that owns a factory that what they do is they send them like old devices or whatever and extract silver and gold from them. So at least I'm lucky. I can get directly like metal from him at like zero premium. Yeah, zero premium. Yes. This is how
Arnaud is here.
Okay, great. Okay, I hope I covered it.
You did. Gosh, I mean, you even went into the physical market. I think you did. Everyone thinks that he covered almost everything in the cosmos today. Huh? All right, thanks.
Enjoy the interview, Coach.
All right. So Arnaud, welcome back. I'm making you a panelist, and I'm going to unmute you. And we're using Zoom now, Arnaud. So
yes.
Okay. How are you, bro?
I'm good. How are you?
Good. So there's a green box that says share.
Okay.
And then you just click the screen. See that?
Yep.
Okay.
And then, oh, sorry, I forgot to push a button.
That's okay.
There we go.
There you go.
There you go.
All right. Wow. Okay.
You covered everything. I don't think I have to say anything.
The chart? Yeah, you have it all labeled, that's for sure. So
oh yeah, we try to do our best.
Okay, so welcome back. How have you been?
Thank you. Pretty good. A little bit under the weather the last week, but I guess it's the season. But hanging in there, trying to figure out what this market is up to, what it really wants to do going forward, and what it has been doing. It's been a little bit of a tracking nightmare, so to say. But once we get back to good wave counting, it starts to clear up, I think. So
where do you think we are?
Well, we are higher than we were last year, that's for sure.
Yeah. I mean, what from where we are now going into year end, you're thinking new highs into year end? Is that where you're 3 or
Oh,
C?
yeah. So here, I've showed the Nasdaq 100, the NDX, with one of or several of possible other wave counts I'm tracking. And if we go, can you see my cursor, by the way?
Yes.
Okay, excellent. So if we go to last week, we had just a 2-3 day pullback. It definitely didn't go as low as I would have liked to. If I actually go to, for example, my short-term S&P chart, I would have liked to see the market drop a little lower to about 30.75, 30.60 ideally, and then rally. But if it's a strong bull market, most often we just don't get the depth of the retrace that we're looking for.
Yeah.
Why was I looking for this type of retrace? Because of the prior one we had all the way back in early October, which went to 28.92 in cash and 28.85, I think, in the futures market. I was a little bummed because I did tell my premium members to buy at 28.85, but cash market never got there. And the next day, it opened, you already start chasing it. And since then, it's just been a relentless move higher with very few dips to actually trade unless you're really accurate. So we've just kind of let this thing do its move higher, and at some point the move always exhausts itself and needs to reset. So that's what we got last week. We had a timing window, November 22, 20 or 1822, for the market to kind of start digesting its recent gain, and that was what it did. Now again, I would have liked to see it lower and then rally, but this is pretty much all we got. On the Nasdaq, we can see it held this trend line that's connecting with the April high and here with the July high, so that's a strong sign.
Well, maybe we still get it.
Yeah, it's possible. Fourth waves are.
Or maybe we're just going to go, where does new highs at C come in, or 3C? Is that 3140?
Yeah, that is.
Oh, that's Nasdaq. Yeah, okay.
This is the Nasdaq. So
Yep.
here I have just drawn horizontal resistance and support. That's about at 8,500. If I go to the S&P 500, sorry for switching,
That's
I'd like
okay.
to see somewhere going between 3134 and 3157, and it's following these Fibonacci numbers as usual, quite okay. Last 2 weeks ago, I said we'd go to 3127. And
what's a TF on this chart?
This is what hourly. Sorry.
Oh, okay, hourly.
Yeah.
Okay. Mm-hmm.
And so I think if we move above, I would say 3120 on a closing basis, which already seems to be the case. If we go here to the futures,
Yeah, we're there.
We're there already. I think we're going to go higher. You can see the futures have already traded to 3132. Cash didn't get there, so I think cash market has some catching up to do. That would get us to the 3134. This is a red 100% extension, and if I switch back to the Nasdaq, what is the red? It is this label. If we do this move here, which is let's see, some labels have fallen out. Thanks, stock charts.
And this is a daily?
This is the daily, yes.
Okay.
So then we have 9 waves up. 1, 2, 3, 4, 5, 6, 7, 8, 9 to here, I believe it is. And then we go down here, and now we're here's a label that fell away as well. So we have 1 wave up, 2, 3, 4. If we go higher, we should get 3. We never know beforehand if we are dealing with a C wave higher or 5 waves higher, right? We need to let the market know. You cannot know with any certainty if it's going to be a 5 wave move. If we start at a low, you just don't know if it's going to be 5 up or just 3 and then go lower. So you got to track it both as a and a number, or a C as a 3, till we have actually 5 waves up. If you put just a 1 and a 2, you're kind of intellectually dishonest, because you cannot know with all certainty. But you do know that the C wave moves higher. You do know that the third wave moves higher. So you know the direction of the market is higher. So that's fine. then at some point the market will just let you know if it's going to be 5 or not, and then you kind of know better what the bigger picture is going to look like.
What's your weekly outlook, Arno?
So yeah, so here I'm kind of looking for a marginal higher high on hopefully negative divergences on the relative strength index, on my buy sell indicator, on the MACD, which has already given a sell signal. You can see money flow is not where it used to be. There's less money flowing into the market at these higher levels, and it's a liquidity game. So that's not going well. And so somewhere I would say this week 31.40. Then I'd like to see a 2-week pullback at a minimum before we start rallying again. So I would like to see a Sana rally. I know everybody's waiting for it. I hope I won't screw the pooch on that one.
Yeah. So is it possible that where you have C and 3 labeled on either alt or the C3 question mark, that could be actually 5 up there?
No, I don't think that's going to be the end of this rally. And one of the main reasons is very simple. If we're going to look at market breadth is, I think, the telltale of what is going on under the market. And one of the best indicators, I think, is, let me go here to the monthly. This is the advancing declining line for the NYSE. And so far, the monthly line is still pointing up strongly. There is no divergences. We need divergences here, like in 07 and in 2001, where the market goes higher and less stocks are participating. We get this negative divergence. We had the same in 07, 06, 07, 08, where the market went higher, green line, but less and less stocks were participating. We do not have that on a monthly time frame.
Okay, so we could be good for another, what's your outlook? Good until the elections of next year?
Yes, yes. I do not see a bear market around the corner anytime soon. Can we get a correction? Yes, absolutely.
Well, the nature of 5 to 10%?
Yes, very normal. They happen quite frequently. And so if I go one time frame shorter, which is the weekly NYAD line, AD line, like in 2018, we had negative divergence. And in 2015, we had negative divergence. That means we get a pretty decent correction, 15 to 20%. That's what we had back then. Now here, these green arrows and these boxes show that actually we can even get a correction without any divergences on the weekly time frame. And like, for example, 2018, here at the beginning, we had a pretty scary beginning of the year. There was no divergence at all on the weekly time frame, and it has happened here in the May correction we had. There was no negative divergence. What it also means is that after this correction, the market will go higher. If you do not get these divergences on a weekly time frame, we do get a decent correction, but it will also tell you every single time since this bull market started in 2009, the market will go higher. Now, if we zoom in even more to the daily time frame, we can see here in 2008, in January, we had very tiny negative divergence, right? The market went higher, but the market breadth was not confirming the high. It made a lower high. Same here, we're kind of pushing, in my humble opinion, the boundaries here of what is still sustainable. We've been pushing higher in November, but the advancing declining issues line cumulative is not confirming this move higher. So we might get a decent correction like in August or in May on our hands, which would be pretty much a standard 5% correction. I mean, nothing really to and after that, I think we're going to go to new highs again, because there is no divergence on a monthly, no divergence on the weekly. So I think we'll just get a good, decent, shake out the weekends correction coming.
And then a melt up.
And then a melt up. Yeah, I think there's no sign anywhere in breadth that we're going to enter a bear market then. I'm sure the headlines will be full of bear markets. I just don't see it based on this, because the advancing declining issues is kind of like a liquidity line. It shows that a lot of stocks are participating, But right now, on the daily time frame, we just simply see less stocks participating on the shorter time frame. We need to see it on a very
And
long
that's
time frame.
is that happening in the S&P too? It's happening on the
No,
NASDAQ.
no, that's another issue. I haven't
Okay,
shown
so
it to
that,
you.
I mean, I was noticing that technically too, because a lot of the FANGs aren't making new highs here. Or no,
Right.
maybe half of them are. And
Right.
they used to
Yes.
be the leaders. So it seems to me like there's more cracks in NAS 100, and even the chart looks weaker than the S&Ps.
I agree. It's been a large cap rally, which is one of the signs of a ending bull market. Let me go back here.
You mean when the generals lead without the troops?
Pretty much.
Okay.
I think it's been kind of brushed away by a lot of people, but it's quite obvious. So here I have plotted the S&P 1500, which is I think 90 to 95% of market capitalization. Then we have the S&P 500, the mid cap, the small cap, the weighted average cap, and then the NYA. And you can see the 1500 is moving new all-time highs. Of course, the S&P 500 new all-time highs. The mid cap still no all-time highs. It made an all-time high September last year. It's still lagging. Can break out, but it's still lagging. That's not a healthy sign. Small caps, I mean, not even close. I mean, can still break out. It's still lagging. The weighted average still lagging. No new all-time highs. The NYA still lagging. So these are still signs of an aging bull market, not the signs of a new bull market.
Right. So but you think they could keep the balls in the air and have a melt up in a year?
Oh, absolutely. Yeah, absolutely.
And is it strictly going to be Fed induced?
No, I mean the Fed, of course, has a thumb on the scale, by providing additional.
So these cracks are only but cracks that don't cause any fractures for another year.
That's my opinion. Yes, that's
Okay.
how I see it. The underlying indexes show it's not a rising tide lifts all boat market anymore. That's what we had up till 2018, correct? Everything
Okay.
was rising.
Now you have to be
now
a
the
stock
tide-
picker.
It's becoming more of a stock picker market. Just like you
Yeah.
said, not all FANG stocks are there anymore. I think
Right.
Facebook hasn't made a new all-time high. Netflix is way
Yeah.
down. I wouldn't want to touch it. Google, Apple, of course, is going really strong.
Yeah.
That one also looks to be in its final move higher.
Amazon's not making new highs either.
Amazon either. No.
And that was a darling.
Oh, absolutely. Yeah, absolutely. So it does show the rising tide is not lifting all boats. So something is not working properly anymore. It can always change, right? It can always change, but for now we have to use the data we have at hand. And the data at hand shows, well, this rising tide is just not lifting all the boats. Even the strong stocks like Amazon, Facebook, Netflix, they're not the darlings of Wall Street anymore. Yes, there can be sector rotation going on, but the sector rotation is to really big cap. Big cap is safe. Apple won't go away anytime soon, so you rather want to invest in Apple. Smaller companies might be much more economically sensitive, and they might actually close the doors once we hit a recession. The recession is not being announced yet by the liquidity charts. Now, could the Fed have been, I would say, skewing that chart? Yes, of course, because there are, of course, putting extra liquidity in the markets. Right now, they're doing their.
What do you think is behind the Fed's actions in the Fed funds market, overnight repo market?
Well, that is a trust issue, correct? The banks are not willing to lend to each other.
Yeah, why?
So I don't know. I don't work for those banks, so I couldn't answer that question.
No guesses, or
well,
is it a canary? Have you ever seen it before?
A canary in the coal mine? Yeah, of course it is. Everything is always a sign that something is going on that is either going well or not going well. In this case, if banks don't want to lend to each other, I think it's mostly between US and Europe. It's not a good sign that these banks are not willing to lend money to each other because they don't trust each other. So
yeah, Brock is saying it could be Deutsche Bank. Or maybe
possible.
HSBC.
There's definitely been some rumbles going on there. I don't really follow it that much, but I heard some rumbling going on there a couple of weeks or months ago. So maybe under the surface, it's not going so well, and maybe in 5-10 years from now, we all go like, oh yeah, that's what it was. But I'm not an expert in that. I follow the stock charts. That's my that's my expertise.
So why don't you let the audience know how they could follow you on Twitter and perhaps show your website if they have an
Sure,
interest in
sure.
following up here?
Yeah, let's see. Well, you can always follow me on Twitter here. Let's see, where's my profile? At Intel Invest, and where I post intraday stuff. Some is funny, some is weird. For example, was interested in what people thought about the new Tesla. This is, by the way, Subaru window. It's much stronger. Where I post intraday stuff from either myself or some of my work by my colleagues. Here I have my financial astrology expert, Mr. Kumar, who posts some stuff on what they're following using financial astrology to predict the markets, and looking on where the market is intraday. I have a few private Twitter feeds where I post trades, and I follow crypto currencies as well, where you can sign up for. Unfortunately, my website has a server issue, so it doesn't look so great.
Okay,
right
so
now.
you're covering, you're doing Bitcoin now, buddy?
Yeah, I'm also doing Bitcoin, believe it or not.
Okay,
Yes.
very reflexive market. Quick view on it before we say goodbye?
I think we're gonna bottom here. Let's see here. I think I have a Bitcoin chart here. I think we're gonna bottom here at around 56, 70 somewhere at some point. And then
Okay.
we're going to have a nice fat bull market coming for the years to come. But I think we have to shake out. I was already thinking after these 2 days rally, the bull market had started because we just came off the 62% retrace.
Yeah, right.
But it had different intentions, and that's what happens sometimes. So we had to reassess the charts. Let's go to actually. I think this one is probably a little better. So we have 5 waves down. This is probably a B wave up, and we're going to follow here another 5 waves down. It is insanely oversold. We'll probably get a nice oversold bounce, hopefully a marginal lower low to the 76% retrace, which is an absolute normal 2% retrace, wave 2 retrace, and then we should rally. That's
the money wave coming up. Some fib extension
yes,
of one.
Yeah, we have a nice impulse here from the 2018 low. Timing wise, I see this somewhere hitting the low early December. That's my timing wise. For those who want to trade the Bitcoin fund, the Grayscale Bitcoin Trust Fund.
Well, Arnaud, Santa is getting a little bit old, and it's much easier on his back to carry around crypto than all those big packages. And Rudolph too, his nose isn't as bright as it used to be, and so he actually, Santa used super glue and put a Bitcoin on Rudolph's nose. So anyway, I really wish you and your subscribers and your community a great holiday trading season, Arnaud.
Thank you. You too, Dale. Absolutely. Yes,
and,
absolutely.
Thanks for coming back, and may pips rain down on you, not rain down on you, snow on top of you like a blizzard.
I'll take that.
All right, buddy. Thank you.
Thank you very much. Have a great day.
All right, everyone, my trading warrior brother Arnaud, check him out. That's a wrap for us, everyone. Have a great day. See you for Tuesday. Remember, don't just count your pips, count your blessings. Adios.